Okay, good morning, everyone. Happy Thursday to you all. Today is August 13th, 2026. It's great to have you along for the ride, trading the ES minis. Let's satisfy the regulators' demands to show the disclaimers, to make sure everybody understands their trading is risky. It's risky business. NFA compliance rule 2029C subparagraph 1. I've said that so many times. I could be an auctioneer. Trade with money you can afford to lose. Past performance not indicative of future results. All right. All right. Let's take a look at what's going on. Today is a cycle day 2. Okay, again, we've been in this range for multiple days now, but it appears as though, at least again, no predictions, but I think we at least get an upside attempt, resolution to the upside. You can see the multi-day profile over here. Okay, and if we kind of split that profile up, you can actually see 77.65s, again, plus or minus here, right? And we'll do plus or minus 10 because the market's been kind of chopping around there. But you can see here, very little volume, relatively speaking, that is, of course, but relatively low on the bottom side. So again, when the markets have traded down, into those areas, right? Who's sitting and waiting, right? The BTF crowd. Okay, the buy the F and dip crowd. All right, so sellers push it down, sellers dry up, and push it back. But the majority of the activity, okay, really has been above kind of the 65s here, right? So that should be fairly clear. Now that does not guarantee an upside push, but I will say that if you were to lay some odds, right, I would say, and I am saying, not a prediction, but there should be at least an upside, attempt. And that's kind of what I've written about this morning, right? And at least to test, right, the all-time high. So that's kind of what I'm looking for, whether it's today, into tomorrow. But I kind of opined in my post there earlier that, probably an attempt to the upside, right? So let's see how that unfolds. Again, you know what the game plan is, everyone, right? Obviously, stay in alignment. But you can see from this lowest low over here, this most recent, look at the trend, right? It has been obviously migrating higher. So the core lean, what's been the core lean? Even within the consolidation period, what's really been the overall, that is, right? Overarching core lean. Exactly, Forrest, right? Core lean, regardless in terms of, we've been oscillating throughout the day, but over the period, the core lean really has been up, you know. This initial pullback here was certainly expected after that dramatic, 2-day, rally. Okay, so pullback, right? Found the level at 25s, 30s, and then since then we just kind of backed up, oscillated, came back down, retest, right? Again, higher low on this pullback, and then since then it's just been a slow grind, up a little bit, volatility in between. We had the CPI yesterday, but for the most part, kind of following that trajectory. All right. So again, my sense is we get this upside attempt, and what really needs to happen, right? We get an upside attempt, and we want to, if we get a subsequent pullback, we want to do what? We want a CNC. The CNC stands for clear it, and convert it. Convert it to upper support. All right. So that's kind of the outline. I don't have much more to beyond that. And I guess we had PPI today. Okay. Like we had with CPI here, a little push up. PPI, we have the push up. What was it? PPI with the actual was 4.7%. The forecasted at 4.9, so obviously came in better, so slightly less kind of core inflationary pressure. Okay, and then the so that basically says that you know, kind of the read through there is rate hike expectations are lower, right? Basically, with this cooler than expected PPI, right? I am not an economist, but seems to be good, right? A little bit lower inflation. Everybody's screaming higher inflation, higher inflation. Remember, expectations and obviously actuals, you know, go with the actuals, not the expectations. Everybody has an opinion. Go with the metrics. So the numbers say better, market likes that, and that's all it matters to us, right? So for our purposes, alignment is the key, and that's the way we'll be. All right. Very good. Any other questions, comments? Hopefully Marcus can hear us. What else? Anybody else have anything? We got a little bit of time. I don't have much more to add at the moment. Stay again, guys. Stay in alignment. Really, it's just I can't stress that enough. Oh, there you go. There's Marcus. All right, great, Marcus. You can hear us. Super. All right, excellent. Marcus is a trading professional. He's been around for a number of years, so it's great to have Marcus with our group. All right. All right, we're expanding. We're reaching all parts of the world. 1 second. Okay, Marcus, I unblocked you once again. So you should be all set from what we talked about. Very good. Okay, so on our daily trade strategy, 75s is line in sand for us today. Again, market's held above that. And the push, you know, again, once again, and I say once again, I'm going through these levels, and many of these levels are just being repeated in terms of targets and such, because when the market's been sitting in a range like it has been, the market tends to revisit the same levels over and over again. They get trafficked over and over again. And so, sometimes they, how many times have the 95s, right, responded with sellers, right, been rejected many, many times, right? So at some point that's going to change. The calculus there will certainly change. When that is, again, we don't try not to predict that in any way. We just plan for it as a viable scenario. And again, if it unfolds, then we just look for the evidence that it is holding. So a breakout attempt. Remember, attempts are just attempts. You need to have the sustainability, you need to have the volume, surge. Okay, yeah, down goes Frazier once again. That's what's been happening all week. So the more times it's, a level has been tested, there's a good chance that they try to push through. Because each time the level has been tested and the market retreats, right, as it has been of 95, what that does is it creates a lot of, again, if you're an intraday trader as we are, we're basically flat at the end of the day, right? So no position, so it doesn't really matter to us. But there are many that hold positions for multiple days. And so if they're fading the markets up at around the 95s and the market retreats, well, hopefully they've taken profits on the way back down. But there's usually a clustering, right, of buy stops, right, now have already formed above those 95s. So, of course, the market loves to do what? Right? It loves to wabbit hunt, right? I call it the Elmer Fudd wabbit hunt, right? We're hunting wabbit. And so people call that liquidity runs, whatever you want to call it. But generally, they're going to try to go and try to sweep those and see if there's any real sustainability above current levels. So I think there's a pretty good odds that we get an attempt at that today, I think. It's just my spidey sense, right? I think the underlying dynamic here suggests we make that attempt. But we shall see. Like I said, it's not a prediction. Let's see what happens. All right. All right. We're all set, locked and loaded. Take your time, play your A game. Yeah, check the D level. Money box. A 7,800, and then it's up through the 11s. All right. And away we go. All right, so we do get, let's see, what do we get? 94s to the high at the moment, right? So we're within our parameter of our 95. So quick rejection so far. All right. And again, that's no surprise. Market's been kind of grinding up pre-opening. So having a quick downturn right off the opening, that's fine. Long day ahead of us. Or at least till noontime. All right. Let's see what happens here. I've been kind of looking at the market recently in kind of increments of 10 handles at a clip. That seems to have at least kind of given me, the kind of a kind of what we used to call anyways the 10 handle rule. That was a Mr. Top Step. Kind of one of their rules is generally the market kind of moves in 10 handle increments. So, when I was market maker years back, a lot of times that's what I would be doing. Instead of having, levels to the tick, I always did things kind of rounding, rounding it out. So like 5 handle increments, 10 handle increments. And if the rotations tend to be around 10 points, right? So if you had a rotation that pulls back around 10 points off of a high, many times that provides usually a good kind of a low risk entry point on a pullback. And then in most cases, your risk off of that entry is, anywhere from, 7 or 8 to even 10 per contract. So, okay, went down 10. Is it going to go down another 10 immediately before it maybe tries to go up, 5? Still 10 handles. Still 10 handle is still kind of a good rotational rule of thumb. I mean, just kind of take a look at it here, right? Right? 10 handles, not quite 10 handles, but getting close, right? It's a good rule of thumb. That's all I'm saying. All right, very good. So let's stay to the long side, early long lean, right? Right, again, continue to consider entries. Don't worry about where we are. Don't worry about the 95s or whether it's going to break out or not. All right. And again, I talk about that in terms of, the overall landscape. But when it comes down to it, right, rubber meets the road. Don't get yourself where this level is going to hold or it's not going to break out or it's going to break out or again, it's a scenario. What you want to do here is price pulls back into that fair value zone and the trend and the lean and the move up. What are you doing? Are you buying within the fair value zone or not? That's all you got to think about, right? Don't let, other stuff kind of get in the way of doing that. What's the lean? What's the momentum? Buy that pullback. There it is, up through, right? So we're getting that upside move. Okay, long of discount here if you grabbed it. Yes, we are into the money box zone. Do you love a money box? So for those of you who are trading that, you know what to do. Yeah, exactly. All right, one of the next levels here, we're through 95s. 7805s is our next on deck. Okay, so that could be a scale point for you. But how did you know that it was gonna break out? How did you know? I got to know. There it is, 7805 target filled. I got to know. Remember that? Dirty Harry. I got to know. How did you know? Yeah. All right. Push, push, push now. Again, you are in the D-level money box zone for those that are working that. That was one of those you got to get in on the out of the gate. And again, we have a cycle day two. So, again, typically a cycle day two, generally we're seeing kind of consolidation, right? But yesterday we really consolidated. Okay, so today, cycle day two, we actually, again, anticipate a bit more of expansion, right? Markets go from expansion to contraction and vice versa. Well, we're kind of due for an expansion. And now we have it. Now the question becomes, of course, right, is the sustainability of this move above those 95s? We're going to assume that they will hold. It will hold. So we will be looking for pullbacks. If markets reverse back below 95, then we'll reassess. All right, strong breakout attempt, right? I'm just going to make some notes. All right, so I just made some notes for y'all. Just some of my initial thoughts, following through with my earlier thoughts. Very good. All right. Again, there's a negative gamma, above these levels. So remember, negative gamma does not always imply markets going down. Okay. Negative gamma, if the dealers are short as a result of long calls being purchased, right? They have negative gamma. As prices go higher, what happens? Negative gamma works both ways, depending upon how the dealers are positioned. Okay, so right, I saw a post this morning that there's a significant amount of negative gamma, so that can actually fuel the upside. Everybody understands that? So gamma can work both ways. It's not always to the downside. Negative gamma, that is. So there is a negative gamma position. We'll see how far that kind of opens. Give it a chance. Give peace a chance. All right. All right, there it is, 78.05. Let's see, we get a little bit of rejection given that level. That was kind of the area I was looking for. All right, so again, one sec. All right, so shorts from if you're playing the D-level money box, you got shorts off the 76, oh, excuse me, 78, 056 zone, 7800. If you shorted MB1, right, again, your target is D-level into that area. We'll see how that plays. Not much of a pullback. Again, that was a discount there if you grabbed it. Nice enough to enter. Yep. Right. Again, did get a little bit of a discount into the 7800s. Yeah, you did. You did. You heard right. All right. Nobody's going short, right? Well, again, if you're playing the D-level money box, do your thing. Momentum players, though, Again, we're staying to the long side. We gotta do change that. Change that. Like yeah. All right, so Freddie got the A4, Super Fred, nice. So much easier to just stay in alignment, is it not? All right. All right, so if you're in on that A4 long, you've scaled. We're above that zone right now for entries. Right, these are not up at these levels are not you know a little bit stretched in terms of trying to get on board, wait for some sort of a pullback into that fair value zone. Right, guys, try to drill it into your head. All right, as best that you can. Right, when you're in alignment, get into that fair value zone near to the 89. All right, certainly on a first pullback, but even potentially subsequent pullbacks can be valid depending on the strength of the move, right? The momentum, right? Again, that is going to be the optimal area to enter a trade.
Cycle high alert.
Now, what would be the first area for, pivot support, right? Would be against this pivot here, around the 7800s. I think we can safely say that the market's converted the breakout of the 95s. So 7800s become the first.
Cycle high alert.
And, if there's a retest of the pullback area, that would be the first zone structurally.
Cycle high alert.
Right, let's see. Let's see here. Oh yeah, what was the high? 20s. Yeah, 7820s was the all-time high. So again, that certainly is a target. We're only about 6 handles away, 5, 6 handles away. So 7820s is the target to test the all-time high.
Purple cell.
All right, on deck should be a no-brainer, as they say. You know who's buying them now, right? Those that have to. Those that must. All right, there's your 20s. There's a retest of the all-time highs. Now we got a new all-time high. Bing, bing, bang, boom.
Cycle high alert.
Yeah, they're forced to. Yeah, they're being forced to close shorts, clearly. All right. Good, good, good. Again, my primary goal, of course, is to keep everybody on the correct side of the market action, right? If you dare to defy me, you pay the price. Literally. Now it's the FOMO, right? Frustration of missing out. Oh man, I missed it. I should have gotten it. Now I gotta go chase. If you missed out on it, you just gotta be patient. All right, there will be another opportunity. Right? Just gonna be another opportunity. If you are long, happen to be long and just kind of holding, this is the time where you can you just simply, scale and trail, as we call it. Scale and trail.
Cycle. Cycle.
All right, so now there's new all-time highs. There's no real resistance above us, right? So the market's just going to keep, pushing until it finally finds a level where somebody's going to react, right? Don't try to pick those levels. Just stay, again, if you're not in, you're a spectator. If you are in, you're managing. All right? That's what it all comes down to. Until there's another opportunity where, we get some sort of a pullback, some sort of an area where we get another opportune trade. All right, so all I'm doing right now is just kind of looking for if we get some sort of a pullback potential where, again, we could look around, 16, 17s. We got a cluster down here at 12s, right? So one of the things we can do is just kind of looking at kind of area clusters, volume. Okay, those are your cluster areas. So if we get pulled back down into that, those are the high volume nodes. Okay, so you want to be potentially looking in there for a backfill response if we get it. Bringing this in opening range on the ES is running right now. This is our nice opening range trade right out of the gate. Good time, strong move there. We also got the same thing on the NQ. We got dual scales on the NQ. Unfortunately, we're out of ammo on that one, but we did get the first two scales. So NQ played out beautifully. ES is playing out well also. See if we can get our third target, or second target rather, at 32. All right, so that's the opening range plays. Crude oil didn't produce anything there for us today, but the other two did. So again, in terms of let's continue to discuss overall the what we're trying to accomplish in terms of thinking, okay, about what we want to do, right? So we gather all this information, we outline a potential trade plan, right? Scenarios, and which is all great. And again, I think my scenarios here really played out beautifully today. With kind of what I was looking for based upon last night's review of the patterns, and then our brief introduction this morning. But I wanted to post something out there ahead of that anticipating the breakout or attempt to push higher, right? I didn't know it was going to happen today like it did, but I was anticipating for it to happen for sure, right? So that said, with all the preparation that we do, okay, remember, of all the preps that we do, we need to then have an action plan, right? An aggressive action plan. So one of the plans, again, one of many perhaps, but one of the plans, right, is what? What's our first plan? Well, actually, again, I'll say what's our first plan based upon RTH, regular trading hours. What's our first plan? Yeah, the opening range breakout, correct. That's why I put that's why I gave you a little hint by showing you the opening range here, right? Of course, John, staying in alignment, right? That's kind of the core of everything is always going to stay in alignment, right? But again, through all the preparation, like okay, I think we're nearing for an attempted breakout, attempt, etc. So then, what I'm trying to do there is prompt everybody to kind of thinking, okay, that is the primary scenario, and so okay, and again, not knowing if that's going to truly unfold, but we're anticipating it to unfold. So we have to kind of, we have to push to one direction or another. Okay, and so the direction, even coming into the RTH opening, favored what side? The long side. Okay, so now you got to be thinking, if I'm not long prior to the opening, which there were opportunities, but if you were not long prior to the opening, then how would I want to play the opening? Okay, so again, one of the ways is you can do is certainly wait for the 5-minute opening range to unfold and then take that trade. Right, 5-minute breakout or a 15-minute breakout, but again, we're going to focus on our 5, right? So here's our 5-minute high, our 5-minute low, right? So we get the breakout, okay, and then we get this little pullback to the 7,800. Now again, we saw that as a discount on the execution chart, but if you were looking at it, say on a 1-minute here, right, that's going to again, what does this constitute, right? Constitutes the first pullback from a breakout of the opening range. So what I'm getting at is that I want you to, going forward, you need to start thinking and preparing about what type of trade do I want to get involved in, right? You want to be, you just want to be mentally aligned, not only price aligned. Okay, that's when I speak of alignment, of course, most of the time I'm referring to price, right, and the dominant force on price, but also the alignment concept also refers to your mentally aligned. Are you prepared? Okay, are you prepared? You need to ask you that. It's a rhetorical question. You don't have to answer me. Am I cutting out? All right, is it better now? Much better now? Okay. Okay, thanks. Yeah, definitely tell me if I'm cutting out and stuff because I don't really know. Okay. So again, my comment here was I speak a lot of staying in alignment, and most of the time I'm referring to price alignment. right? Dominant force. But in to expand that idea about alignment is you need to be mentally aligned, meaning that you need to know, you need to prepare what you're going to do. Okay, so if we're looking for the breakout, how are you going to play that breakout? What trade are you going to be looking for, right? So, and then if we're getting the evidence of a breakout as we were earlier, okay, you need to already have decided how you're going to trade that breakout. Does that make sense to everybody? Yes, we all want to buy a pullback. Got it, right? So when that starts breaking out, you have to be then prepared. I want to buy the first breakout. Excuse me, first pullback following the breakout. So you need to be really prepared for that. Okay, mentally ready to go. Pull the trigger when you see it. Something to think about. Something to make sure that you're in alignment along with what we talk about or what we're trying to prepare for with the market. All right. That way, again, you're in control of your decisions. Yes, we want to see what the market will give us in terms of so we can make our decisions, but you need to already have prepped up for it. So something just to consider, you know, under what conditions do we look at a 1 minute opening range? Every day? Every day. It's a 5 minute zone, but you can look at it on a 1 minute chart like I put here. All right. Same conditions apply. Yeah. I mean, nothing really changes. Same conditions apply. What's the zone that I have on the 1 minute? Okay, see this gray zone? All right, that's an 821. I'm sorry, that's not an 821. My bad. That is a 21 high-low zone. Okay, it's an 821 high-low zone. I use 821. It's basically I use a 21 on a 5 minute chart, and then when I drill it down into a 1 minute, I still use that 21 zone. Okay. Yeah, it's different than the 1334.89. I mean, I'm primarily looking at that on a on the tick charts. Okay, so if you're wondering, that's in 21 high-low shadow or zone. And what that does, that approximates. So some of you like trading and I know I've gotten a couple inquiries about this, but some of you like also looking at a 1 minute chart. Okay, so the 1 minute 21 is equivalent to, not perfect, but it's equivalent to the 34.89 on our execution chart, our 750. Right, so 21 high low, 21 high low is equivalent to the 34.89 on our execution charts.
Like
I've never done that. Oris is saying, on in terms of a blending, is it good to take a trade on every 1 minute within the first 5 minutes? I've never tested that, so I can't really speak of any. I mean, I would say, test it out. Look, just test it out. Yeah. I don't know. Okay, that's what you've been trying to do with the micro lots. Okay. Ah, the paint bars are good. Beautiful. All right, super. All right. So, anyways, you'll see here on the, again, this is a 1 minute, but you'll see the dip into the 21 zone here. Right, that's on a 1 minute. Right, is a dip into the 89. So, some of you, if you want an alternate versus the 750 tick, and you like the 1 minutes time period as well. I mean, that's a viable uh, play. Again, just using the 21 zone. It's an alternative. My core is always and will be the 34.89. But if you are, kind of converting it to a time period, some people in their minds, they just understand the time, like a 1 minute, 3 minute, 5 minute. They understand the time element, the way they process it versus ticks. All right. How much time is that? So that's a way of doing it if you wanted to use a 1 minute. All right. Still kicking it off, still staying on the long side. Not much more to do. All right. Again, that did consolidate a little bit there. So I know it's at these higher levels. So this is the confusion people will go through. It's at higher levels. I don't want to buy them at these higher levels. How does that go? Does that have gone through your head? Anybody? I don't want to buy these higher levels. It's high. It's too high. Yeah, we all have, right? The question to be asked is not that whether it's too high or not, is whether the configuration and price has shifted. Has the configuration and price shifted? And the answer, of course, is no. So the idea is this. Take this chart or either one of these charts, all right, and isolate it in your head. In other words, forget about that the price has broken out to higher ground. If you were to isolate, okay, this chart, this area right here, just isolate it. In other words, I just took that and gave you a snapshot, and you not knowing any of the context in terms of where price is, that it's broken out or it's gone up 40 handles or whatever, right? This is how you want to think about it. You want to compartmentalize. Did I say that right? Compartmentalize your decision. What does that mean for us? That means get rid of all the other stuff in your head about the market's moved 40 handles and we're breaking out, and in your mind when you say it's too high, you know what's happening? The inner critic, and we all have it, the inner critic is saying, don't buy it, don't buy it, it's too high, you're going to lose. That's what's happening. So it's in a sense trying to prevent you. What you need to do is isolate the signal, isolate the chart, isolate what's going on. Disregard anything else. What I'm doing is I'm zoning in on this right now. So if I gave you this picture without any further context, what would you do? What would be your decision if I just isolated this? Yeah, I'm going to do that right now. If I gave you this, okay, there's your picture. If I just gave you this and you knew nothing else, you didn't even know the price. Well, you see the price up there, but what would you do? What's your decision? Yeah, Oris says buy. Okay. Anybody else agree with Orist? Say yes, no. Come on, jump on board the bandwagon. Steve says yes, buy. Marcus says long bias. Yipper says John. Okay, John South. All right. So again, the question is, if I just gave you this signal, isolated it based upon our patterns that we look for, what would you do? Yeah, it's a buy. Okay. So what's my point to all this? My point is, when we make our decisions, okay, we have to isolate the decision. This is just one signal, one pattern. Okay. Yep. Freddie, buy at the A4. You got a discount there. Okay. So that's what I'm trying to get at. It's the thought. Again, my whole goal here now forward with everything is zoning in on our decision making. We see the signal. We see the markets, ripped 40 plus or so handles, right? Our first thought tends to be, I don't want to buy that because it's too high. Well, what is too high? Define metrically what is too high. Markets broke out. It's brand new ground. What is too high? Is the sky too high? What level of the sky is too high? You see what I'm getting at? I know it's, what I'm trying to drill into your head is, regardless that the market is has pushed up to where it is, what is the configuration in price on that signal? Does it show that it's quote unquote too high? Is it too high? How do you determine that it's too high? You can't. All I know is that signal in and of itself, isolated, would be a buy signal. And that the action there would be to do what? Buy it and manage it. Our tendency in our heads that we see the market has ripped as it has, we tend to be more cautious when it starts pulling back a little bit. Oh, this is the one that's going to go down. Oh, if I buy it, sure enough, I'm going to lose. That is the inner critic inside you that is trying, the little man on your shoulder that is trying to prevent you from taking the trade. You have to override that and say, that trade in isolation or that signal in isolation is just a buy. It's a discount like any other discount. But the momentum and the direction is solidly in place. So what should I do? Focus on that kind of decision process. Use this as a really good example. Write this out for yourself, by the way, or review this video. Mark the time down, 10:30, August 13th, and then go back and review this segment multiple times. You got to do it and drill it into the head to the point where when you see this, all you do is boom, I bought it.
So Rom's right? You're going to play the signal in front of you. If you get stopped out, BFD. You have a plan for the getting stopped out, right? You have a minimal risk or maximum risk. You've already accepted that, right? That's it. Nothing more to talk about. Nothing more to consider. You've planned it out. That's it. Oh, damn, I missed that one. Okay, you missed it. Use it as an opportunity to learn from it. How many trades? I can tell you how many trades I miss for one reason or another. But if you're super focused, you're just sitting there waiting. I'm waiting for that discount. I'm waiting for that discount in this configuration. I'm waiting for that discount. I'm waiting for that pullback. Okay, keep repeating that into your head. I don't care what else is happening. I'm not looking at Twitter, X, whatever. I'm not looking at CNBC. I'm not looking at anything but the chart. I'm just being patient. I'm waiting for that pullback, waiting for that pullback. Right? I see that the oscillator is coming down into discount territory. Be sure to look at the oscillator often. Most of our attention is right on price action. Train yourself to watch that oscillator, because this part of the oscillator, right, as it's moving down, when you look at the oscillator, there is no price associated with the oscillator. You see that though that's representative of price, you know that price is pulling back. What you want to isolate on in terms of the oscillator is as it's beginning to enter the discount zone. Now it's entering the discount zone. What do you want to do when it enters the discount zone? You're planning on that entry. So that price is pulling back. You got to pay attention to the oscillator here in these conditions. The oscillator is going to give you the moment, the time to enter that trade. Because you know once that oscillator enters the discount zone, what's it going to do? It's going to hook back up. What is price going to do? It's going to hook back up. It's going to do what? It's going to pivot. What's the oscillator going to do? It's going to pivot. Okay? That's what you do. When you're looking at the oscillator, there's no reference in price. It's just, there's no price point there, right? It's just the oscillator. That's telling you when you want to get active. Then go look at your price and do what you got to do. Place your right side pivot rule stop or buy it at the market, right? Get on board. Isolate your decisions. Does this help? Isolate your decisions. Yep, buy discounts and bigger strength. You want you want the backdrop, obviously to be on your side as well. So up here right now, in this area, okay, I'm going to isolate it again. If you are not in a trade, is there a trade right here? Is there something you want to enter right there? I would argue no. Negative. Why? I see that the market's still, grinding higher, but there's no signal for me anymore, right? A good entry signal. So I'm now in monitoring mode. I'm just monitoring them out, just watching. But when I'm watching, again, I'm still thinking, I'm looking for that buy, all right, that entry, that configuration, right? Maybe we get one over here and it comes back up again. Maybe we don't and it rolls down deeper, all right? But right now, here and now, that's not an entry. You can consider the next long at the high volume node area. Yep. Again, right? You're planning it out. Well, the premium stars, Orist, in this particular configuration with the strength, right? These are still these are actually these can be considered take profit levels, right? Because they're premiums. So if we're getting discount here, right? So which is a long, and it pushes up, and we get a premium. So what's happening in the oscillator, right? We get a discount, and then it's pushed up into premium. So that would be a good. That's a 200 extreme on the oscillator. So that would be a good take profit consideration. But it's not a short. It's all about the configuration. And I've said this numerous times, and I will say it again. I don't care where the price is. I don't care what price it's at, the level. It's all about the configuration and price. That's why if you accept that as a premise, you don't care if the price is broken higher to higher ground or lower ground or wherever it is. You don't care. It doesn't matter. All that matters is one, recognizing that can we have momentum, bullish, and then I want to get on board where I can. Doesn't matter where the price is. If you accept that, if you choose to accept that. Yeah, so the green star here, okay, is when price is when the oscillator is entering the discount zone. Yes, it's the 16. Okay, and again, this is all real time. There's no lag. What I've done with this signal, with that, particularly with that green star, notice where it is on the oscillator. It's on the left side, right, of that signal line. So in other words, when price is in the oscillator is going down into the discount zone, that star is painting as it's going into the discount zone. Most every signal out there that I've come across where they use oscillators, the signal is on the hook higher on the right hand side. Well, by the time you get the hook on the right hand side in the signal, price has already made a significant move higher. This is what I've come to find out on virtually every oscillator that I've come across. The signal is on the right hand side. And I said, well, that doesn't make sense. I want to be notified by the signal as it's entering into the zone, because I know what's subsequently going to happen. It's going to hook back up. So that little extra time where I will get a signal before it hooks prepares me to enter the trade at a more efficient point in time and perhaps price. So our signals are based upon prices pushing into the zone. That's where you get the stars. You can also pair up the stars with audio if you want. Sometimes audio can get overkill. Like I have audios that will go off, and at some point your brain just ignores the audio. So you have to decide whether or not audio is good for you. Correct. So the white stars is based upon the larger oscillator. Okay, and again, it's at the 200 level. You got it. Good job. Okay, how's audio now? Try F5 to refresh if you lose audio. Sometimes it's on my side, sometimes it's on your side. Okay. It's like you're sitting at my desk. Well, that's essentially what we're doing here, right? We're all sitting together side by side. We're just virtually. All right. Good questions. Hopefully this is all good for everybody. These are all the little details that once you've mastered, you work into your repertoire. I knew it, John. John's on a BLT short here. I knew it, my friend. Very good. John got the BLT short here. BLT on the short side. That is John's trade now. John South. The Chilean connection. Oh yeah. All right, we'll see if we get we'll get back into this high volume node area. We'll see if we can get if we get a bounce out of this, if the buyers are still active here or not. Again, you can see how things now have shifted a little bit anyways, right? So the momentum to the upside. You can see here in the bid-ask volume ratio, you can start seeing as prices were kind of coming up into this area, the amount of upside buying pressure started diminishing, right? So this is the bid-ask volume ratio indicator that we have. So just think of it as buying and selling pressure. So into the highs here, again, you can see kind of the momentum started waning on the oscillator, and the bid-ask volume ratio started getting a little bit more dominant sellers. So not as aggressive buyers any longer. right? Versus, the previous signals on the way up. So that was a potential for the market to kind of rotate back lower. All right, so you can kind of see that developing. Sometimes it's not an instantaneous signal. It's like, okay, boom. Sometimes it takes a little bit of time to develop. But you need to be kind of, again, also cognizant of that. Again, our A10 long here, again, that's been struggling. And again, after a big move, it needs to kind of re-energize here. We've had good longs to the upside to this point. Now we're probably coming into more of a consolidation phase, right after this run up. Yeah, thanks, Steve. Sorry about that. So I've just highlighted some high volume node areas, potential.
cycle.
All right, very good. All right, so at this stage, right, longs right now are closed. Probably now just more in observation mode a little bit. Again, John South, our Chilean connection, grabbed this discount, BLT. All right, short. Very nice, John. Good job. Barbara sends her regards to everybody. She's a little bit under the weather, fighting an illness. So she sends her regards to everybody. Yeah, she'll be fine. She'll be fine. But she hasn't been in the room lately, and she's just saying she just got a little bit of an illness that she's working on. So everybody knows that's her signature trade here, right? BLT stands for Barbara Lopez trade. All right, so that's her signature trade. So every time I see that, I think about her, even if she's not here. All right, so trying to find some level of kind of consolidation support here. We'll see if these 20s, 78 20s does the job. I'm not sure if I classified a BLT as a PKB. I don't really recall that. 1 second, Oris.
cycle.
If you want to learn more about the BLT, premium and discount reversals, aka the Barber Lopez trade, BLT, there it is in the modules. It's module 6. Okay, it's module 6.
So everybody's starting to see it a little bit clearer as I walk through some of this stuff. It's hard to it's hard to walk through it and trade and manage at the same time, but I'm like, I'm like a juggler, right? I'm like a juggler going bloop, 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 bloop. Marcus here has been trading for a number of years himself, and I'm sure many of much of this is familiar to Marcus, but at the same time, maybe a different and a fresh perspective on price action and how we view it here and how we act. What actions we take. So just need to whip the lunatic in alignment. Yeah. Yeah, I think this week has been a pretty good week of various lessons. Again, it's been slower than normal in August. So certainly be sure to mark off this particular week perhaps to go back and revisit some of the video replays. And of course, you can speed up the video replays to reach your particular area. Or probably the better thing to do is if you find that, like this morning beginning at 10:30. So you mark off 10:30 on 8/13/26. Go back and review that segment. So you can zoom right into that segment of the video. So that's really kind of what you need to do. Make sure you all should have a notebook in front of you. I have one of these 5 college ruled notebooks, and each of the sections I have different things on it. And so, and I get a notepad in front of me because if I don't use a notepad, honestly, I'll forget because I get so much going through my head. So what's funny is if I go out and my wife says, "Oh, pick up some milk or pick up some water or whatever," you know what she does? She writes me a note. Literally, writes me a note because she said, "You're gonna forget. There's so much going through your head. You're gonna forget what we need." So she writes me a note. So I've come to write lots of notes to myself. It's not that I deliberately forget. It's just that I have so much going through my head that I don't prioritize. So I need to have a note. Yes, once you've entered the trade and you've taken some risk off, having a trailing stop, knowing that you've protected whatever gain that you may currently have, and then if you get stopped out on the trailer, then it's all good, right? And you can relax. You're right, exactly. It's a little bit more relaxing once you've been able to get what we call risk-free and then manage the balance of the position. And then you do the same thing over and over again. All right. So the upside momentum obviously has, you know, dissipated. All right. So now we have an A4 short over here, as well as premium, in this case, a premium signal short. Why are we taking shorts? Well, the market has shifted a little bit. All right. So you can see here, market shifted. Again, our EMAs, our 89 proxy EMA has shifted, right? 34.89. We got a bear stacker. Yeah, we got bear stackers as well as ATR 4 bear, right? So what are we doing? Right, taking a short. Again, remember, we're intraday traders. We go with the flow. The flow has shifted. We are no longer on the buy side. You can be bullish, but don't be a fool. Remember, and I'm going to repeat this once again, if we were to take these trades in isolation, right? Take the A4. If you took that in isolation, or if you took, in this case, the premium, if you took that in, although either one of those in isolation, what is your trade? We're going to call these the isolation trades. All right, we'll make a new name for it or something. These are the isolation trades. Take it in isolation. What are you doing? If you know nothing about what happened in the market prior, what are you doing? That's the challenge now for you going forward. Think about isolating the signal. What would you do? Signal to signal, signal by signal. And of course, you know what the answer is going to be, right? Geronimo. Right? Oh, so Oris. Let's just go to Oris's question earlier about the stars. Okay, Oris, you're still here? Okay, great. So we were talking about the stars earlier, right? So this is a 200, right? We call that a 200 XT or an extreme. Okay, so here it is. The stars, right? This star actually, the one on the right. What did that do? It penetrated the 200 extreme. Okay, we have a premium condition, downtrend. In other words, down leaning condition. Price pushed above the 89, right? So price, okay, greater than the 89. When the 89 is sloping down and the 34 is underneath the 89. Okay, so that's the formula. Price greater than the 89, and the 89 is sloping down, and the 34 EMA is less than the 89. That is a, yeah, but it's an extreme sell. Okay, it's an extreme sell. So once again, if you go onto the website, I'm going to direct you guys over to the website. If you go on the website, and you go into the member video tips, okay, go into the videos and member video tips. And there you go, right here. Premium Extreme. Click on Premium Extreme. It's going to bring you to a video. Premium Extreme. Watch that. Okay? Premium Extreme. You also have Discount Extreme. Well, after the commercial. But you'll have, right, so Premium Extreme and Discount Extreme. So since we have a Premium Extreme today, okay, be sure to watch that video. It's a short video clip. 2 minutes 39 seconds. Watch that. And then take a look at what happened here. And tell me what you think. I think the key lesson for today, will be a new trade concept. It's not really, well, I guess it's a new trade concept for us because we've just, to start discussing it in this manner. We'll call it the isolation approach. So where we isolate a specific trade signal as part of our OTA loop decision process. What would you do on that signal if you know of nothing else? In other words, if you isolated that signal away from anything else in the marketplace? What would you do? Another thing I recommend is to take snapshots. Okay, here's an example. Why you want to take example? Because you're going to create a playbook. Everybody have a playbook? Here is my playbook. Okay, I have a category called Discount Extreme. I'm going to create a new folder called Premium Extreme. Okay, I don't have that folder actually. So my Premium Extreme folder, and what am I going to do? I'm going to dump that image that I just created and I gave to you into that folder. So now I have exactly what a Premium Extreme example is for that trade. Your job now is to review what, or it's to begin creating a playbook. If you haven't already, Rom has, but if you haven't already, create a playbook and begin to create a library of various trade setups. I will assure you, if you do that, you will accelerate your training. Write some notes in it. Write some notes on a chart. Write some notes next to it. Be sure when you become profitable, which I'm confident you will, don't forget it's 10% to the big guy. All right, we got the premium here playing out. We got our A4 here playing out. He was busking. It's called busking, John. Yeah, guys, if guys, if you weren't participating in the in the PTG project here, again, I would have to revert to busking. You know what busking is? Anybody know what busking is? Busking is playing an instrument in public where they throw money at you in your guitar case. It's called busking. So if I wasn't doing this, I'd have to be busking. Yeah.
cycle.
All right, very good, everyone. We got our second take profit there on the premium. All right, and we got a runner working. We got 3 take profits on the A4. Okay, and I'm gonna drop my trailing stop down a bit. All right, so now that's protected. Remember that last contract should never, never, never be a loser after we get the 3 take profits. Okay, it only can help us with a runner. And so I just brought it down to protect the balance of that position. All right. All right, I'm going to be cutting out on the stream in a few minutes. Does anybody have any final questions, comments, considerations about today's activity? Marcus, I think you got a pretty good visual today of a lot of what we do and how we do things. I think this is today was ultimately a good example of how we approach all our trades and how we do our analysis. All right, super. Yeah, let's talk about see how we what we do here and how you've traded over the years. I'd love to get a deeper conversation about that. But this is a pretty good example of what we do and how we do things. The market obviously cooperated with us. The market's been a dog over the past few sessions overall, but today we got some expansion and now move up and move down. So no complaints whatsoever, right? So I usually run my segment until roughly 11:30 or so for a couple hours, sometimes till noontime, but generally most of our community trades primarily the morning sessions, and we are open all day long. Charts and everything are online all day long till 4 o'clock, market close. But I'm generally off the mic after a couple hours, and then I'm generally available throughout the remainder of the day, but it would be more from answering questions and things like that. Right, so I think you got a very, very good compliment today. And all these sessions, by the way, are recorded. We also broadcast here to YouTube. All right, so you can see right now we are live on YouTube, what we're doing. But our broadcast to YouTube is delayed 5 minutes. I was thinking of delaying it 10 minutes, like most data feeds do. But the key is it's delayed